Well, look, thanks for having me, Scott. Look, it's good to see you guys. I don't know how much the sell-off is going to be. I mean, we never know exactly. But this sell-off has been ongoing now for a few weeks. I mean, the month of September has been pretty rough. And we have to recognize that August was a bit of a blow-off move centered on those technology stocks. So that's where the correction has been the harshest. And so if you're going to have more of a correction, then it would make sense that the damage would be greatest there. By the way, it's just a correction in a bull market, right? We got too extended, and now we have visible things that people are worried about. And we just had this meeting with Congress around the fiscal stimulus is the big issue. And if that doesn't happen or gets delayed, that's going to weigh on equity prices in the short term for sure.
But look, I mean, the NASDAQ 100 right now is down 12% from its high, right? You're talking about the NASDAQ 100 going back and testing its 200-day moving average. That takes you to 95.83. I mean, we're looking at another 13% downdraft if your numbers are right. So you're at least putting some sense of idea as to how far down we could go from here.
Well, that's exactly right. We're trying to figure out what the downside could be. That would be the maximum drawdown, right? The 200-day moving average is a good technical level. I mean, that's what you have to look at now, Scott, right, is the technicals, because it's a correction, and that's our only guide at this point, right? We're still bullish on the recovery. We're still bullish on stocks going into next year, but we have to be honest with ourselves. It got overcooked, right? All of these trends got a little bit extended in August, and we're just, retracing back to the trend lines. I mean, that's a natural place for it to draw down to if it continues. We already took out the 50-day. So that's kind of your next step. I mean, could it stop somewhere in between there? Of course it could. Okay. But there's no doubt. Let's talk about what's driving this, right? That's really the bigger issue here, Scott, is are we really concerned about a fiscal, cliff causing a double dip recession? No, we're not, because we think ultimately something will get done either before the election or after the election. And there's probably enough gas in the tank to get us through. There's other things weighing on the market as well. Of course, we have the second wave to deal with. We don't know what that's going to look like. And maybe that results in further lockdown. We don't know. And of course, the election. So just a lot of uncertainty, higher volatility, a classic September, October correction. That's what's going on right now.
But how do you advise people then to think about buying the dip, right? If no one knows where the market's going to go from here. Obviously, if we did, we'd be doing something else. But how do you advise people if you still think we're in a bull market, but things could get ugly in technology? What are my viewers supposed to do with that?
Well, first of all, it's not just technology, right? The whole market is correcting. And in fact, yesterday was about the recovery stocks, right? The recovery stocks really got hit exceptionally hard, and technology actually performed pretty well in that. So it's a broad correction, just like it's been a broad rally. So what we're advising our clients is, look, we're fully invested. We were aggressive kind of at those lows, buying stuff, and we've been buying stuff all along. And all we're telling folks now is, look, this is natural. This is what you should expect. We actually thought this correction would happen in August, if you really want to be, flat out honest. And we missed that by a month. Okay, fine. So now we're in it. We don't think we're oversold enough necessarily. It's not the end of the world. We're not telling people to try and trade this on the downside. And by the way, we'll be buying technology stocks into this sell-off. We'll be buying all kinds of stocks into this sell-off. That's what we're advising people. Be patient here. Let's look for things that we want to own into next year. Let's not worry so much about the next couple of months and take advantage of this dip.
No, you always have a good way of putting everything into perspective, and that's why I enjoy the back and forth, the conversation about where you think we could go. So, Josh Brown, you take all of this together and you put it where? I see you adding to CrowdStrike, which you've owned, adding some on, as Mike Wilson just said, on the way down.
Yeah, so I've been averaging up in CrowdStrike. I'm looking for stocks that didn't fall during the recent volatility and that remained under accumulation. CrowdStrike, very obviously, to me, wants higher. I was going to point out, I like the fact that Mike is using technicals, because I really don't think you can look at something like a NASDAQ correction and make calls on it based on fundamentals, because the fundamentals for these companies are not changing. If anything, they're only improving. And Zoom Media is a great example of why that's a foolish game to try to play. Here's a stock that goes from $480 a share down to $350 and then back up to where it is today, new record high, $490. All of what I've just described took place during the month of September, and it's only September 22nd. So in 22 days, do we think that Zoom fundamentally was worth tens and tens of billions of dollars less and then more? Obviously not. So I think that game is a technician's game. And to answer your question, Scott, that you posed to Mike, I'll give you my take. I really don't think that the average market participant should be doing anything like trying to figure out a NASDAQ correction ahead of time and how to play it during. It's not a game for someone who's not in front of their screen all the time and well-versed in how to use technicals as support and resistance levels. It's not a casual game. And if you play it casually, you're just going to chop yourself up into sushi, and it's not going to work out well for you. So I think Mike's right. For most people, focus on what your game plan is. Don't worry about the next month. You have no control over it. No one knows anyway. And try to buy quality.